Welcome everyone, this is John Shealy at Traders Country Club, and we're going to take an annual review 2015 for many commodities. But of course we're going to have to look at our disclosures. As you know, there's a very high degree of risk involved in any type of trading. This includes stocks, options, futures, and forex trading. And trading is not suitable for all investors. And past results are not necessarily indicative of future returns. Our website also includes the hypothetical results disclaimer, and please review that on our website. This was a big year for commodities, and of course, one of the biggest moves was in crude oil. As you can tell, we had a huge percentage decline in crude oil. Most of it started in 2014, but even in January in 2015, we also had a bearish trend for quite some time. We're going to talk about, however, the very large corrections that we had, even in the weekly chart in the April-May section. Let's take a look again. We're going to take a look at this particular price action, and you're going to look at indicators. That's the moving average, and we have a little band above and below the moving average. That's based upon 2 and 4 average true range above the moving average. And we'll talk about this momentum indicator that we use for major trends. The red bars basically are for established bearish trend. The cyan color is for a bullish trend. And we have, in this particular case, occasionally we'll see a blue bar for a potential new bullish trend. Here we're taking a look at the brown bars on the chart, and this is for a potential bearish trend, and of course back to a bearish trend in the color of red. All right, let's take a look at the price action basically in the beginning of the 1st of January. We are looking at a very strong bearish trend. But what's happening to the momentum of this bearish trend in early part of January? The histogram basically indicates a bearish trend or bearish momentum, and the blue histogram is bullish momentum. What you're looking at is that we set new lows in price, but take a look what's happening in regards to momentum. Momentum is not bearish. It is changing to a bullish momentum. This is why, in this particular case, during the January part, you were aware that there could be a larger correction in this bearish trend. These two blue dots that you're seeing here is actually a measurement between the lows and the highs based upon ATR, average true range. Within 1 to 3 days after you see these blue bars here, or these blue dots, you're going to see a potential return to the bearish trend that actually occurred after we had that final correction because of the lower momentum. So we did return back to the bearish trend. Here is then our two dots that were basically defining a potential large correction in the bearish trend, and sure enough, within 1 to 3 days it returned to bearish trend. But what happened? The white bars are responsible for watching, based upon the code, looking for a potential two things. One, is there a potential breakout of either the support or, in this particular case, resistance? That's what you saw in the chart in regards to early April. This is actually turning into a potential correction, a fairly large one, that breaks out of this support and resistance. In this particular case, it's resistance. The change of trend begins to turn in the middle or late April. This color indicates that the market is now bullish, but where does the prices normally stall? That is in between 2 and 4 average true range in regards to a new trend. Well, that's exactly what's happened here. You're seeing basically a stall here at 2 and a pretty good, actually a large stall, if not a reversal, in regards to 4 average true range. This is why that in regards to you making profits, either bearish or bullish, you're able to make money because you take partial profit and then actually reduce your buy stops or sell stops so that basically the money keeps it in your account and basically goes in the same direction equity curve. We had basically swing trade corrections that you had to potentially trade here, but the problem is it got rather flat, didn't it? So you could have actually had some losses here if you didn't begin to notice that the bars began to change color in regards to a quote potential bearish trend. And that's actually what happened in the last part of June. You had again actually a wonderful bearish trend here. You had a large correction again in the basically early part of September. The two blue dots indicate a potential return to the bearish trend. It did, but not very much, did it? Moved sideways actually for the basically price action for most of the month. We basically begin to white bars in October as we begin to break through this resistance. But in this particular case, again, it stalled at 2 average to range, and sure enough, it moved back down. This actually would basically set up for a potential loss here. This would have been actually, of all the price action for the year, October would have been very difficult. Could easily had some losses here. So basically you had a great year, but this particular area right here is probably setting up for a particular loss. Actually maybe 1 to 2 months. The price action is becoming bearish, potential bearish trend as you see the brown colors, and then of course you see a correction here that's relatively small, and now the red bars basically looking at the strong bearish trend. So all of this would have been just fine if you'd taken partial profit. All right, let's talk about crude oil now for the next, let's say 1 or 2 weeks. This could have a correction because of primarily this. Watch this very close. Here we've got some blue histograms. That kind of warns me that there could be a larger correction in the first or second week of January. So watch this very carefully. If you watch the equity market especially begin to rally, then we may very well watch a larger correction in this bearish trend. There's nothing within this price action right now, however, indicate that we have changed to a bullish trend at all. The only issue I'm talking about now is it possible for us to have a short-term correction in the first or second week of the new year, 2016, and that is certainly possible. Let's take another look at the energy sector. Now we're taking a look at natural gas. This is actually the biggest collapse in price, even more than it did than the crude oil. You had 2015, we had a very strong bearish trend, but notice, as we mentioned, basically our momentum indicator, we set new lows all right, but the momentum was not very strong, was it? In fact, it was relatively bullish. So this is why if you made some profits here, watch and be careful about a new bearish trend or new bearish trades here, because the momentum was going in the opposite direction, and that's what happened. Doesn't mean a change of trend, everyone. It means that the correction could be larger than you expect. We have a fairly large correction based upon the price action in regards to average true range from the lows. Here's the two blue dots to let us know that we're expecting a decline actually back in the direction of the bearish trend, and you can see that occur in regards to the late February and early March. Here, the bearish trend continues in regards to April. In this particular case, actually, the momentum was still bearish, so we were not looking for a bounce in regards to divergence. But what happened in the early part of May, the bars become blue. That becomes a quote potential bullish trend, and you can see that here. We actually setting up for a long trade, but we have to take partial profits, and we able to do that anywhere between the 2 and 4 average true range. We then get our stop losses and move it up to actually entry prices here, and as you can tell, we made partial profits here, and the market moved down, scratched the remainder of the trade, and at least we made something. So all the way through January through May, you actually had a decent year in regards to making money off of natural gas. However, it gets worse from here, and the reason being is here's June. we get into a bearish trend, and instead it completely reverses. And this price action right here over the last 2 months, there's no question about it, you ended up having losses here. Hopefully it was relatively minor compared to the whole year's profits, but in this particular case, this is what all of these signals here was basically a losing trade. This bearish trend did not set us up for even reaching the profit objectives, and sure enough, we have a decline that just doesn't hold. So we come back up. We think of a potential bullish trend, instead backing down. This is when 2 months out of the 12 had losses. This is when it occurs, but that's okay because the money is coming back, and that's because take a look at the August. The trend turns back to bearish. The potential bearish trend gets more, let's say, established. The red bars are stronger in regards to the bearish trend, and you had a very, very basically collapse of the natural gas, and you had a great trade here. All right, let's take a look though the last week of 2015. The 2 blue dots means, remember, that within 1 to 3 days we're going to see a bearish resumption of the potential bearish trend. This rally was 2 days, so within 1 to 3 days, and it basically declined. It basically started trying to resume the bearish trend. But take a look at the price action on the last of the year. We are now at the moving average. That by itself is basically a potential resistance. So there's no issue in regards to whether or not we have information that's going to suggest that it is a bullish trend. But what this does mean is over the next 1 to 2 weeks, watch natural gas very carefully. Because if indeed we begin to get blue bars, then you're going to take a look at a potential new bullish trend. If that's the case, then we're going ahead and looking for a long trade. We'll take profits though, remember, in this particular area, and then move our sell stop if necessary, so very close to our entry level. But just watch this over the first 2 weeks in January, the first or second week. Let's take a look at another commodity. Gold actually was kind of going up and down quite a bit in regards to the 2015. Here we're looking at the first January of 2015, and the blue bars, remember, looking for a potential bullish trend, and that actually started setting up for a particular trade. This is our code. We'll set up the strategy. We'll actually put on anywhere between 1 and 3 contracts for gold, and then we'll take partial profit between 2 and 4 average true range, and you can see that occurred here as a quote new trend, and actually the bars turned back to bullish when it got stronger and stronger in regards to relationship to the other bars and trends in the distance. So here we have a bullish trend. We have a correction that was bigger, and for swing trades it actually would ended up a losing trade in regards to potential swing trade. Here are the 2 red dots that was watching the correction from the highs to here, and what we expected was a potential return to the bullish trend. We had an up close, and that's what counts in regards to whether or not we have a quote return to the bullish trend. But instead of it moving higher, it breaks the lows out of this swing low. That means that there's more evidence, therefore, of a bigger correction in the month of February. And sure enough, it not only does that, it turns into a potential bearish trend and actually had nice profits here. So basically it was a little bit of potential losses right in here, but you would have been able to make some profits here, again, only if you had taken profits. Here are the 2 blue dots. Here's the return to the bearish trend. And what these blue dots do, remember, this allows you as a short-term trader, you can basically trade actively based upon this information of whether or not the market should have a quote return to the bearish trend or a return to a bullish trend. So just keep that in mind. Now in this particular case it was sideways, but it is still a bearish trend. The white bars means that there's a break above resistance here, and that's exactly what happened. It basically failed where 2 average true range. The reason I'm showing you is this. You're noticing the 2 and 4 average true range. That is true whether or not it's gold, right? Doesn't matter. Crude. We took a look at the Forex currencies. Same thing. All of the things that we use and teach, especially everything that we use for measurement of trend, it's the same. We use the same strategies regardless of it being a stock index, commodities, or Forex. We're using the single strategy to analyze prices. In regards to the big rally, here we have as we said, we began to fail. We turned into bearish. We had great July, large correction. Here is our bars within 1 to 3 days, and here it comes. The blue dots was setting up for a potential, basically we were ready to buy if what? If this market started turning back up, moving above the high of the prior day, then we'll go ahead and turn into a potential new trade. But instead, what happened? Instead of it holding here, we immediately moved down. And that means it just resumed the bearish trend. But the white bars right here is indicating that the trend is very uncertain. And that was very, very clear right here in regards to the September. These were setting up for potential losses, everyone. A reason being is the rally was very small, and therefore it really didn't go high enough to reach a profit objective. And that's how you take your losses when you're waiting for your first level of profit targets and it just doesn't rally high enough. So in this particular case, September has a very, very poor trade, but we have a ability here now to return to your equity curve based upon October. Basically, it was turning back into a bullish trend, and we had a nice little rally here, again, between 2 and 4 average true range. We're only looking at 2 to 4 average true range only when it is a new trend. In our strong bearish trends, in which the weekly chart is still long-term bearish, we're not going to buy based upon 2 and 4 average true range if the weekly trend is severely bearish. And that's why we're only watching for rallies against the long-term weekly chart. Here we're taking profits. We changed to a bearish trend, and you can see now we've done that. But take a look at December. We set new lows in regards to the price action in the first week of December, but instead we've lost almost all of our momentum, and it's turning into bluish momentum. And because of that, our bullish momentum is basically letting us know that we have a little bit concern about the price action in the first or second week. Notice this first, second week is going to be very interesting in many of these markets right now, because we have the potential of basically a larger correction, whether or not it's a bullish or bearish trend going into January. So we'll just watch. This is still a bearish trend. We're not even close to being a bullish trend. And so we'll watch the price action. If it does set up, we'll actually watch for a potential new bearish trend in the first or second week of January in 2016. In the last few minutes, I want to take a look at actually copper. The reason I'm showing you this is notice that the rallies that occurred, and there was this previous extremely strong bearish trend, actually occurred in several different markets, meaning the dollar was actually having a weakness in regards to the price action in March, April. Same regards to the gold and silver, and even the crude oil had some basically bounces at the same time that many other commodities were doing the same thing. I'm just showing you here in copper, it had basically a very similar price action in regards to the section of the bullish trend, and here looking at the bearish trend. The reason I'm showing you this here in the last week of December is that notice that the momentum did switch over the last week in November, and we've basically had a little bounce here now for a month. And the reason I'm saying that, this is very similar to what we've seen in regards to some currencies. It's very similar to the basically price action of the silver, a little bit of price action in regards to gold, some of the basically larger correction we may be seeing in regards to gasoline. This is why I'm saying let's just watch this price action in the first 1 to 2 weeks of 2016, because something's going on in regards to many other commodities at this particular time, where they all seem to be correlated to the next price action. Now I'm showing you coffee. The reason I mentioned coffee is there's a reason that we use very similar strategies regardless of the commodities or forex currencies or stocks, even stock indexes. The research that we've done in regards to price action and trends, it doesn't make any difference what trend you're looking at, especially in regards to the daily and weekly price action. Reason being is, take a look at coffee. Here we have a bearish trend for a long time. The only time that we see bounces of rather large corrections was in December. We're seeing it here. We're seeing some in October, and we see some here in August. But what are we basically watching? Prices fail. Fail where? Between 2 and 4 average true range. Here, and potentially the first week in 2016. We use the same strategies, same price analysis, regardless of the commodity section that we're looking at. And now we're taking a look at the ES, which is of course the E-mini S&P, which will create our own video in regards to the stock indexes. I hope you've had a good year in 2015 because we've had some excellent trends, especially if you had partial profits in all of your major trends. This is John Sheely with Traders Country Club.